That's right. And there are legal issues that correspond to all these concerns, including a big legal issue that's coming up, which is what are these cryptocurrencies legally? Are they currencies like a dollar, and should they be regulated like that? Or are they really more like securities, like a share of stock?
So we're really lucky today to have two people who understand this stuff, unlike me, to talk about it. The first of them is our colleague Joe Grunfest at the law school. Joe teaches corporate law. He teaches securities regulation. He used to be a commissioner on the Securities Exchange Commission, which is the federal government agency that regulates securities.
And our other guest is Brad Garlinghouse. Brad is the CEO of Ripple, which I think can safely be called the leading firm in this space, depending how you define the space. He's a 20-year veteran of Silicon Valley.
So, Joe, how does blockchain work?
That's a great question. There are many different versions of blockchain, and I've sort of come up with a story that I use at cocktail parties when people ask me the same question. And what I typically do is I'll take out a dollar bill. Right? You know, your listeners can look at the dollar bill that I've got here now. And what I'll say is, imagine that this dollar bill, the value of this bill, wasn't in this piece of paper with the picture of George Washington. Rather, it was embedded entirely on that code, the serial number that's on the bill.
Like the thing when you play poker with bills, that number.
Yeah, that's exactly right. Yeah. So you've got this serial number, L272376064T. So imagine if I wanted to transfer this value to Brad. Well, what I would do is I would whisper in Brad's ear, L272376064T, and the algorithms associated with the regime would in effect change that number to L2673845E. I would then no longer remember that past number. That solves what's called the double spending problem, and the new code would now reside with Brad, who has the new dollar represented exclusively by the code. The code is the value. Somebody steals that code, you lose the value. You forget that code, you lose the value. Not to get too far down into the weeds, but our security system now typically operates on what's known as a T+2 settlement cycle. You buy or you sell something. You've got 2 days within which to deliver the security, and you're not going to get paid until 2 days. And that creates billions, hundreds of billions, trillions of dollars of credit exposure, and that's a hidden risk in the financial system. I think Brad's proposition is that it's possible to take blockchain technology and, in effect, blow up the current infrastructure, replace it with a blockchain where you would, in effect, have T+0 or T+epsilon settlement, where you would sell the security, you'd get paid virtually instantaneously, and the recipient would get it, and there'd be fewer errors in the system.
For sure.
Let's get to is it a security issue? And Joe, can you explain what the issue is? Why does it matter? And who's arguing what?
Well, it matters hugely because if these instruments are actually securities, they then have to comply with all of the regulations of the United States Securities and Exchange Commission, and those are non-trivial. That would mean that you, in effect, have to register the security, which can be an expensive and time-consuming process, or you have to find an exemption from the registration requirement, and that will, as a practical matter, frequently restrict the number of people who can transact in the security or hold the security. Then there are a wide variety of aftermarket restrictions in terms of whether you could buy and sell through an exchange or through a brokerage firm or what have you, and it generally adds friction to the process. And as Brad will tell you, in a situation where you want these transactions to happen as quickly and cheaply as possible, the last thing you want is friction from any source, including the regulators.
Well, sorry about that, Joe. I was just going to ask, so who's arguing that these things are securities, and why are they arguing that?
Well, number one, you've got people who have bought some of these instruments and have lost money, taking their counterparties to court and arguing that what you sold me was a security and you didn't register it as a security, and therefore I get my money back. So what you have is a group of dissatisfied purchasers arguing that their crypto was a security, should have been registered, and wasn't.
So can I just step you there for a second and ask, how did they lose money on the currency? Is it like if you bought dollars and the dollar went down against the pound?
Precisely. Losing money in the markets is a very easy thing to do, Pam. I'm happy to show you why and how. Basically, if you buy high and sell low, you will lose money. So suppose you bought some crypto and it was $1,000, all right, per unit when you bought it, and now it's only $250. You're out $750 for every unit of crypto you bought. You turn around and you say, this crypto isn't just crypto, it's a security. You should have registered it. You didn't, therefore I want my money back.
Now that makes sense, Joe. Thank you. For something like Bitcoin or XRP, how about these things that are called ICOs? There's thousands of, I think, cryptocurrencies. I don't know if you'd call those digital assets, Brad. Tell us about those. Take the other extreme.
Sure. ICOs are at the next level of complexity. Generally, ICOs describe a system that's going to use something like blockchain technology at some point in the future to do something that isn't done now. And you most frequently pay for these ICOs by using crypto. Now, in my own personal opinion, the large majority of these ICOs are frauds or they're going to fail.
So, I totally agree with that, by the way.
What does ICO stand for?
Initial coin offering, where the coin is basically a token or a bit of code that at some point in the future will be useful for something.
But we don't know what.
Well, no, they tell you what, but then you have to assume that this is true, and then you have to assume they know how to do the thing that they're promising to do, which is often a stretch.
Can you give me a for instance of like what is it they promised to do?
Sure. Let me use one that the SEC sued. It was called Munchies. All right? That if you sent crypto to the people who were going to issue these Munchie tokens, you would in the future get a token or a coin or a bit of code that would allow you to get discounts at restaurants. And in return for that, you would Instagram photos of the food, you'd write reviews of the food. So it would be a mini economy built around food and restaurants and the like. And the currency that you would use would be these Munchies. Now, the SEC wasn't thrilled with this, and they actually went and they sued the people that were launching the Munchies. They said you had to register these, you didn't register them, and they settled and they withdrew the plan to raise crypto for the Munchies.
You know, it's so outlandish that I'm tempted to accuse you of just making that up, Joe.
Oh, no. That actually is a fairly modest one.
Yeah, there's better ones than that.
There's way better.
Banana coins. There are all kinds of things. And to your number earlier, I think there's around just short of 2,000 ICOs that have happened. And I agree with Joe.
Brad,
most of them.
My favorite. This one is so meta. It's hilarious. It's called the Useless Ethereum Token. All right? UE token. I recommend everybody go online. This is a white paper where it describes a useless Ethereum token, and whoever the person is that put this together openly says, the token you're buying is useless. I am going to take the money that you send me, and I'm going to buy large electronics, maybe recreational drugs or what have you, but you will get nothing in value. And what's fascinating about this site is you could argue it's not a fraud.
Right. They're doing exactly what they said they were going to do.
And he's raised more than $300,000. This is great. Yeah, I'm with Brad entirely. I was quoted in the New York Times a while ago as saying these ICOs are the most open and notorious violation of the federal securities laws since the Code of Hammurabi. And why the SEC hasn't been more active, they've only brought 7 actions to this point, is a mystery that I can't explain.
Well, one of the things is, if you try to think about this, these are people who presumably if they could have raised the money for their enterprise with just getting people to send them dollar bills or checks, they would have done that. And yet instead, they're saying to people, I want you to invest in my enterprise, whatever it is, by sending me a cryptocurrency. Which raises the question, why are they asking for the payments in cryptocurrencies rather than in dollars that are easy to go and spend anywhere? And Joe, you have a kind of hypothesis on this.
Oh, Pam, really? Look, if you're going to be conducting a fraud, all right, what do you want people to do? All right, send you small unmarked bills, send you a check. Or would you rather have Bitcoin go to Mikhail Mikhailovich in Minsk?
Well, I understand.
Where when it fails, you're not going to get it back.
Well, but you're not going to get the dollars back either. I mean, a check, maybe, a credit card, yeah, perhaps. But if somebody sends you dollar bills, there's no way of getting those back either,
Absolutely.
right?
And from that perspective, you could actually argue that law enforcement prefers that these transactions occur through Bitcoin than in cash. Because one of the things most people don't recognize is Bitcoin is not anonymous. Bitcoin is pseudonymous. Everybody has a public address associated with their participation on the Bitcoin blockchain.
And by public address, you mean something on a computer, not like 47, Bayberry Lane or something.
Well, it's the equivalent of 47. It's a public address. It's a set of numbers, all right, and letters that identify a particular wallet. All right, and it's your public address.
But you don't know where that is. It's metaphorical. Right?
Well, no, you
address.
don't.
Right.
But the NSA probably does. But the CIA probably does. But the FBI, there are techniques and there are mathematicians who are actually very, very good
at figuring physically where that.
Precisely. So when people engage in illegal transactions and they pay for drugs, or for arms or what have you, with boxes of cash, that can be much more difficult for the authorities to track than if you actually are using Bitcoin. Look, for example, at Mueller's indictment of the 13 Russians. Well, they had the Russians' names, and they were able to allege Bitcoin transactions in certain amounts. And, that only happens if you're able to trace the addresses on the Bitcoin blockchain.
Why then, thank you, Joe, why then do people that are, say, kidnappers, we read about in foreign countries, want to get paid in Bitcoin?
Well, that's easy. You see, the problem with kidnapping isn't actually kidnapping the person. That's typically easy. The problem is getting paid. All right? It's a little bit like stealing fancy artwork. How are you going to fence it? So if you kidnap somebody and you want to get paid, and if there's going to be a drop point where you actually have to show up with cash, you run the physical risk of being intercepted at the drop point. With stuff like Bitcoin, with crypto, you eliminate a lot of the physical risk associated with getting paid for the kidnapping, so it actually makes kidnapping a much more profitable proposition. And many Bitcoin whales, many people who have large amounts of Bitcoin are actually very concerned for their personal security.
This is Stanford.
Let me maybe close by covering something a lot of people are wondering about, which is how do we value these assets? I mean, Bitcoin goes from nothing to 15,000 to 6,000. XRP kind of is correlated in rising and fall. Is this a kind of a tulip craze? However useful they are, how do we know what they're worth?
Well, Brad's pointing at me because he doesn't want to touch this with a 10-foot pole, and I admire Brad for that decision. So the short answer is, who the hell knows? And if I knew how to value this stuff, I'd be very, very, very rich and wouldn't be sitting here talking with you guys. There are all sorts of theories. I don't think a single one of them actually works. I have profound concerns about the reliability of information in the market. This isn't a market like the SEC where we know that we have credible information about secondary market trading and the like. It is very easy to spam the information networks, have false transactions, have false prices and the like. A lot of it is who the hell knows. But if you take simple microeconomics, you've got demand cases and you've got supply cases. The supply is relatively fixed. We know how many units of Bitcoin are supposed to be out there at any one point in time. And then you've got demand cases. Well, people engaged in illegal activity will sometimes want this stuff. People looking to speculate and simply buy because they expect that the value of Bitcoin will increase in the future. They'll want to buy some of this stuff. People in countries where they're worried about hyperinflation, they'll want to buy some of this stuff, and some people want to buy some of the stuff because it gives them something to talk about at a cocktail party.
I'll maybe just add to that briefly. I violently agree with that. The long-term value of any digital asset, I think, is going to be correlated with the utility it if it's solving a problem. And I think, as we've discussed, there's a lot of them that either I don't think they ever were intended to solve a problem, or they won't be successful. But I think there will be digital assets that solve a problem, that have utility, and maybe, yes, for some it'll be solving an anonymity problem. Maybe for some it'll be solving a security settlement problem. But I think over a long arc of time, if there's value, if there's utility, then the market will appreciate that.
Well, and I feel just so grateful, Joe, that you haven't made so much money that you couldn't come on our show today.
I have a different view.
Yeah, so thank you, Joe Grunfest, and thanks, Brad Garlinghouse, for coming on our show today.